This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe. We are live from Sibos with two super dear friends, Liz and Lida. Welcome back to Breaking Banks.
Thank you. Good to be here.
So this is news from a FinTech Front show, but it's going to be pretty messy, I swear, because one, we disagreed already about the talking points. Two, I asked them to, what do you want to talk about? They say Kim Kardashian, and I wasn't aware. So let's dive in. Let's start by, talking about the fact that we're back at Sibos. And, I just arrived, but these ladies were here for the whole day yesterday, and it seems a very intense day. How's it feel to be back, Lida?
It feels amazing and strange. And it's actually very interesting to hear people talking about the fact that nobody's pretending it's a return, right? It's like the world is different and people are very open about those challenges. So I find that's healthy, that's good. No one is pretending to go back into normality. And it has a nice vibe. There's that reunion feeling, but also, all the banks, all the big tech companies are here. I must admit, I hadn't seen this many suits in 3 years. I thought they would have relaxed the outfits, but everyone is still in suits. Even my team are here in that sort of half attempt. So blazers, shirts, jeans, bucket trainers.
Is that? Wait a second. Is that true? That I think I read it yesterday. There is a new dressing code here at Sibos, and there is no tie code.
There was a dress code.
I don't think it's a code, but you see fewer ties. You see definitely fewer ties.
I mean, but when I went to go to do like a dress rehearsal for my panel on the Sunday, two of the people on my panel were wearing suits on a Sunday.
Oh wow!
I was like, yeah, of course, yeah. This is the suit event. I think it's like the last time I saw this many suits was London 2019. The last time it was in person. But I mean, I'm wearing trainers today. I wore trainers in Boston 2014, and people took pictures of my feet because it was day 4 of Sibos, and I was tired, and I put on my Converse, and people were like, oh my God, you're wearing trainers.
Yeah, well, day 4 of Sibos, you should be taking pictures of their feet and laughing at them.
So but I mean, it's subdued. I think it's a bit subdued. Like I think it's a bit, I know there's not. I mean, I know we're all about sustainability now, and I don't want ridiculous toys everywhere. But there's less
There's
swag.
no Deutsche Bank car this
I know.
year.
Are there less goodies this year or what?
A lot less. Yeah, a lot less. And
But the car is devastating, and it's for sustainability purposes.
Oh really?
Yeah, but then a friend of mine said, "Oh, I need to bring back toys for my nephew." I'm like, "Go to Deutsche Bank, get a car." No.
Yeah, no car. There's definitely fewer goodies. It's definitely a little bit smaller, but I think that's understandable because people weren't sure.
And they took it up in 6 months, guys. I mean, an event like this in 6 months is science fiction.
Oh, they've done an incredible job standing it up. I think a lot of the banks I know, for instance, would normally have stands, but don't because their budget operates on a 12-month cycle. They weren't sure whether the Sibos would be back in person, but they are here. So I think there's very much a feeling of, okay, we're back to doing this now, and it's actually nice to see. But you are right, it is subdued. And I found it very interesting that the opening plenaries and every panel I've been on, every single one has referenced the global supply chain crisis, the war, the pandemic, and without saying financial crisis, everyone is talking about the sort of pressures of the fiscal systems and on the economies. And I do think that A is very honest and good because that's the reality of it. But two, it sets a very different tone. And I do agree that it is a little subdued, but the context in which we're doing this
Yeah.
I don't think it would
I mean, I
permit
think
too much
the sort of lazy hot take of the past year has been the pandemic has accelerated, digital transformation and blah, 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 whatever. But it almost like there was a pause. There was lots of stuff happening before, and then there was this kind of, we all went to sleep. We're all sleeping beauties in fintech, and I think we're still not quite woken up yet. So yeah, I think there was also a pause. Like I used to do this trick with people a couple months ago. Answer very quickly. If I said to you that happened last year, what year do you think of?
Oh yeah, easily 2019.
2019, which is three,
Yeah,
3 years.
exactly.
So yeah, there was a pause. We're all
I love the fact, guys, that this is so far a news from a FinTech Front, but we couldn't care less, right? So I actually want to double click on something. I just realized, because we were talking about it yesterday with some former colleagues, that there is no Revolut number 26, Starling.
Anne is here. Starling isn't here as a stand, but I just saw her this morning.
Yeah, I know. But no. I'm talking about the booths in the exhibition.
Why would they be here though?
the consumer-facing.
There are other retail banks that are here.
There are big retail banks that are either plugged into the correspondent.
Do you want to talk about big retail banks in terms of market value compared with the...
The bankers that are here are the plumbers of this industry.
Exactly.
They're the plumbers, all right? There's other banks that do, there's the whole Wolf of Wall Street bankers, and there's the whole retail bankers, and companies like Revolut and stuff. They are a consumer-facing product. They're not into securities processing. They're not into ISO 20020.
So we are not surprised.
No, of course they're not there. There's no
This wouldn't
reason
be
for them to be
useful for them.
here.
None of their customers are here. None of their, actually, some of their institutional partners are here, but not the people they're talking to. I'm not surprised they're not here. Like Revolut was here for a long time because you and I both know they were an InnoTribe baby, right? But now that they're not a baby anymore, I don't see why they would be here.
Cool. Okay. That was a first sort of close to a news, that we just double checked. Now let's do a little bit of a leap, because many of the talking points that we discussed were about NFTs in different shape and forms. There is the metaverse session right now in the InnoTribe stand. I hope we are not missing too much. Otherwise,
It's fine. We'll be okay.
No, I think I'll survive as well, just because it's on YouTube, right? And we will all watch it, later on, of course. But couple of points. NFTs has been on the news recently in different shapes and forms. Like Starbucks is all of a sudden offering, that has an NFT programs. The government of Japan is now considering, digital assets as an NFTs and as an integral part of the way they want to innovate financial services. And I am frankly still biased. Of course, the $600,000 to $10 NFTs are now not even a news, right? Everyone is. So what's your feeling about all this?
Well, so we've got all these buzzwords like the Web3 and Metaverse, and then all this stuff in between it and part of it. Okay, so for those of you who don't know, NFT is a non-fungible token. If you're an artist, right, so we are moving into this age where everything is digital. So if you have something that you tokenize that proves its authenticity, that proves its value, that you can transfer that value, that technology I think is going to go very far, and it's going to be very beneficial for a lot of content communities, creative communities. What then the financial services industry and the whole tech bros get excited about is the securitization of that asset and then trading it. That's the part where right now there were little hype cycles, and again, stuff that was sold for $1 million is now worth 10 quid.
Can I say we could have done it without NFTs, and same thing 5 years ago?
Yeah, and there have been scams that did it without NFTs. But I do agree with Liz that the capability of the technology has a future. And I also think that there are some use cases that I'm beginning to hear in trade finance where you essentially tokenize.
Real estate is my favorite one.
You tokenize a process that has certain inputs. So say in a trade finance situation, you'll have your the actual security of the journey, say, and the FX volatility of what's going on, and then maybe a little bit of betting on the weather, and then your bills of lading, and your, so there's a whole componentry of different financial transactions and different components that can actually be wrapped into a thing of value. And that is super interesting. So I do think that there's definitely use for it. It will be here for a long time. I find that the vast majority of use cases that people put it to are at best boring, at worst dangerous, because people are losing money, and there is definitely I know best. I saw 3 TikTok videos, so I know what I'm doing thing. And look, you and I talked about this a very long time ago when I was living in Doha, but a couple of the people I knew when I was out there lost fortunes in the Bitcoin hype. Remember that spike a few years back?
Yeah.
And they wouldn't listen. They knew best. And I'm seeing a little bit of that. So leaving that aside, I think NFTs will absolutely be with us for a long time, but with every other technology that the 3 of us have discussed over the last 15 years, it will take a little bit of time.
Yeah, innovation takes time and hard work and iteration over and over and over and over again. Anything that's in that bubble of I'm going to be a millionaire tomorrow, get rich quick, that takes.
Agree.
That's a separate issue, and that takes away from the actual hard work that innovation
And
is.
why do you want to talk about Kim Kardashian?
Well, let me add to that. No, I want to talk about Kim Kardashian, but I want to add to that because I really, really, really agree with it. And what I want to add is there's also, it's the get rich quick stuff, and there's also the really, really lazy stuff. Somebody on one of my panels said yesterday, like, if you're going to go into the metaverse, why are you taking all the shit from the today world with you? Like, why not reimagine some of it? And he was so exasperated. I was like, it's a very good question. But we're doing a lot of that, and we did it with everything. Like our first digital steps were not very creative, and there is a process in that creativity. But I'm looking at all the metaverse stuff, and I'm bored.
It is so bored. I have seen. This is what. My son's a big gamer, right? So I get this. I get this, like, being in a game and having payments embedded in that game and that whole, like, let's see how that works going down the road. But I sat in this bank conference about a year ago, and they're like, we're going into the metaverse. And they did the panel.
I think I know which conference you mean.
They went into a panel and they were like, we're sorry, we have some technical difficulties. They're like floating heads in some weird virtual reality. I'm like, and I just said, why?
Yeah.
Right? If I want to see, I'm gonna put down 30 grand on a kitchen extension. I want a guy to come into my kitchen and go, boom, this is what it's going to look like before you hand the money over. And I haven't seen anyone say that. It's all gaming and virtual reality and Second Life and all that stuff that's like talking about in movies 20 years ago. I want a new world where you're not sitting there like lemmings with masks on as Mark Zuckerberg walks up to the stage, which I think is like a version of hell.
Ready Player One, go.
It's awful. So yeah, I have yet to see anyone say, this is how the metaverse is going to, be slightly small parts. Like if you watch like Star Trek, right? They open up a computer and it's in front of them. Like I could see that.
We sold a dream that hasn't been delivered.
It's funny, Lisa, that you talk about like the extension of a kitchen, because I actually moderated a panel on the metaverse in Milan last Friday, and it was most of it, like half of it was about like a game industry, which is like a deja vu a little bit, fine. And then I said, okay, guys. They were not prepared for the question, but I love real estate, and some of you know already. But what I want to do is being able to go visit a new flat and say, hey, this is broken, and can I share this image, how this is broken, with someone else? And can this someone else sort of quote me in real life as he or she was there, how much is going to be to repair? And can I maybe invite my banker to see the building, and maybe my banker can make me an offer? Now, one could argue, why the fuck do I need the metaverse to do this? I mean, can I just do this?
But it's those integrations, because when I was at Kimby, we had this augmented and virtual reality componentry as part of our international lending. So people who want to buy a house in Paris or in London, we're talking, like a different level of expenditure here, could do some of their visits and know what the underwriting and mortgage options were from our branches. but you couldn't, with virtual reality and augmented reality, you couldn't do your banker was there, but you couldn't do the rest. And I think the metaverse would be great.
Yeah.
And maybe in 5 years' time we'll have another way of doing it. But it would be great for doing all of that. And gaming is a great place to unleash creativity and play. I don't have an issue with that. And I was actually speaking to ING yesterday, and they're doing some financial inclusion, literacy, financial responsibility outreach to youngsters on the metaverse, because it's like, that's where they are. And I respect that, because it's true. But I'm yet to see the exciting stuff. And again, to Liz's point, that's okay. Everything took a long time. What worries me is genuinely how much time and effort a lot of the big banks, particularly two, but a lot of the big banks.
One of them has a very short name.
Exactly. Are putting in this. And you do get a feeling that it is a little bit of displacement in that all the stuff that we've been trying to do for the last 10, 15 years isn't done, and it has gotten complicated. The economy around you now is fully digital and it's putting pressure on you. I find that the regulators have gotten smarter faster, they're learning quicker, so they're raising the bar. So what we do for a living here has gotten harder. And there is an element of the metaverse is a new shiny thing, and you can be first, and you can be new, and you can do things that don't feel as painful and complicated because you don't need to talk to the people who manage your mainframe.
Yeah.
But the people who manage your mainframe are not going anywhere. So I don't have an issue with people spending time on the metaverse stuff. I have an issue with how much headspace it's taking up, because the world is pretty much on fire. And what we were saying before the camera started rolling, everyone has been a little bit too self-congratulatory about the progress digitization made during the early days of lockdown. Colleague channels were improved. That's it. Like, we had 2 major go lives with 10x during lockdown, but that's work that was already in flight, right? Yeah. It's not, so people are pointing to things, and it's like, you were doing that anyway. This is not,
I agree. The world is on fire. And I mean, we've talked for years about innovation theater, right? That's what it is to me. They put some people, they have a little bit of money, and they're going to show something on stage that has no relevance to the banking business at all, right at the moment. While, the most of the world is in a cost of living crisis, there's a credit crisis, interest rates are up, there's supply chain, Russia is deciding to use nuclear weapons in Eastern Europe. This is real stuff that's going on that floating heads in a PowerPoint presentation is not going to solve.
And don't talk to me about the universe if you're still on COBOL-based infrastructure for my mortgage, right?
Yeah.
I mean, let's be honest about this. Other than that, you're being held to ransom by people who can outcharge whatever they want by the hour. These guys are dying. So we have a very real system. Like, you walk out on the halls, I would tell you that about 80% of the banks out there have mainframes alive and well right now.
Yeah.
So don't talk to me about the meta.
On the mainframe things, right, ladies, let's just wrap it up for the first half.
Kim Kardashian.
I know. This is how we're going to start the second part of the show, okay? Stay tuned. And it's a wrap.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
Hey guys, welcome to the Sibos edition of News from FinTech Front. We had an amazing first scramble, a little bit all over the place this first half of the show, which, the way we love it, with Lid and Liz. And let's start by talking about Kim! Because I didn't even know. I mean, come on, who wants to start?
I want to start, but you want the journalist to give you the facts. So I had managed to not have any interest in the Kardashians for such a long time. Not having a TV helped. I was late to the party, and I know who they are, but I still don't know how many.
Show, right? I know the show.
I know the show. I haven't seen it. I know they exist. I don't know how many of them there are. So,
there's hundreds.
I am
they
a
regenerate.
terrible. But Kim Kardashian obviously historically has been sort of fronting the pack. And the SEC intervened and slapped a pretty major fine, which I think is a very interesting, I mean, she can afford it, she's fine. But it was interesting because it was the first time we saw such a move, and keep me honest here because it may not be, but it's the first one I registered, that they slap a substantial fine, I think it's in the hundreds of millions.
Millions?
Yes.
Yes, yeah.
On an influencer promoting cryptocurrencies and NFTs as a get-rich-quick idea. And you guys, I heard
Like
about
unauthorized financial advisor.
Exactly.
unauthorized financial advice with a disclaimer that this is a paid ad, like in a subtweet or a, I don't, you know. And of course, we all know that there is a lot of that going on, particularly with celebs on the payroll of. But it's the first time that I've seen the Securities and Exchange Commission
Actually
really
get involved.
come in and go, and here's like 100 million.
But
fine.
before her, I mean, the big news in the U.S., there was a big Super Bowl ad promoting crypto.
yeah, I remember
right?
that.
And you know what that is? Casinos make money because the majority of the people that go into it, lose.
Yeah.
Right, and when crypto is an asset class. I know there's some people that are like, yeah, you can buy fish tacos with it. It's a payment system. Right at the moment, it's an asset class. And when they're doing ads at the Super Bowl and hiring Kim Kardashian, they have a liquidity problem, and they need dumb money in the pool. They need people that are going to lose. So when you're seeing ads at the Super Bowl, they don't want experienced investors. They want stupid people. And stupid people are influenced by people like Kim Kardashian, who, that is exactly what that is. Fill the pool with people that are going to lose so that we have liquidity to keep going, and that's the scam.
And it's an interesting regulatory intervention, right? Because the Super Bowl controversy, and you're right, I had read about that. And a casino couldn't advertise during the Super Bowl.
No.
But of course, because it is an asset class, and it is technically a payment system, although I wouldn't say it's the smartest thing to do, to buy fish tacos with your Bitcoin. It escapes the sort of strict regulatory, but the reality is that the way a lot of people engage with it is casino mindset, 100%. And it needs to be regulated in a way that protects those people. And if this is a first step towards going down that path, I mean, under normal circumstances, you wouldn't have been able to have that ad during the Super Bowl.
Ladies, I want to say something because you just made me think of the fact that there is, it start getting dangerous precedents, this thing. Because actually there is an influencer, an Italian influencer, bald like me. It's called Marco Montemagno.
Not as handsome, right?
Oh, thank you. Thank you so much. This being said, Marco is, is actually, I know him, he's a very smart guy. He made like his popularity by doing, marketing interviews, interviewing famous people, and he grown an audience. I saw that Banca Generali, in Italy, hired Marco to do financial education. This, when you get an influencer to do financial education for the masses, don't you think that why is almost, it looks like the last hope for a bank, because if you get an influencer to start promoting and between financial education and how do you say it and investment recommendation is very thin the line, don't you think?
Yes, and it's a regulated line though, so I'm less uncomfortable about that, because if with the little lion sign on the corner you make recommendations of products, you've crossed the line and you've broken the law, right? I am not uncomfortable with the idea of using a figure that excites and gets people's attention, but you have to vet that figure very thoroughly. I'll give you a non-financial example. So I'm Greek, for those of you who don't know, if there's anyone left who doesn't know. And Greece has a very, very high level of vaccine hesitancy, really high levels of vaccine hesitancy, mostly tied to anti-establishment views.
The opposite of
views.
Portugal, which is everyone gets vaccinated as soon as possible.
And it's bad, right? It's really bad. Like it's 50% vaccine hesitancy. It's really, really bad. So the government has been doing a spectacularly good job of trying to engage the masses, and they used a couple of sports figures. Now, one is like Giannis Antetokounmpo, who's like, we don't deserve him. But the other was
because what, he's beautiful,
he's just
he's
a perfect human being.
smart.
He's a perfect human being. He funds food banks in the neighborhood that he grew up in. There was a fire in Greece a few years ago, and he took out a hotel and like paid for it for the people who lost their homes, like out of his own pocket.
Superman and Gandhi together.
He's amazing. We do not deserve him, Willem. But there was another young athlete, a guy called Stefanos Tsitsipas, who
Tennis man.
is again the tennis man.
Yeah.
So he was also used as the front of, kids got vaccinated until it leaked that he wasn't vaccinated. Now, the vetting
Did he take
of
money
that,
for that? Did he get paid?
Yes.
Yeah.
But you also you end up with an egg on your face in the government. So is there anything wrong with the Greek government using those two people to encourage? No, because people who aspire to be like them will go, actually.
No.
But do your homework, do the vetting. So if you're going to use an influencer for access to financial education because they have an audience, because they have charisma, then just make sure that person has never,
Bankrupted his
or
business.
compromised themselves by giving financial advice where they shouldn't be. And I'm not sure that due diligence is happening.
Are we done on Kim, or we can move to the next topic?
Yeah, we can move.
Okay, that's good. So next topic is there is, and I need to read it because the names are hieroglyphical for me. There is this there is a Chilean fintech called Xepelin, I guess, or Xepelin maybe. We don't really care about that. What we care is that Goldman Sachs gave them a $140 million credit facilities, and they are an SME lending startup. Okay, so and this is like a bigger topic, or launches a bigger topic, which is everyone was printing money during the pandemic to compensate the financial crisis, and is now how real is the risk right now that these credit facilities are just given without too much due diligence, and sort of becomes the
but the startup is about helping SMEs with their cash flow to make sure invoices are paid, right? And Goldman Sachs has invested in them.
Okay.
Right, and so I used to have a boss that said, always pay attention to what Goldman is doing.
Oh.
Follow them. And I mean, they do, Goldman's does not invest in a company because they're good people. They invest because it's going to make money.
Goldman is the same as Marcus in the UK, right? Is that?
Marcus is their
exactly.
retail banking push.
No, the same is the same bank involved in Marcus in the UK.
Yes, yeah.
Okay.
Which actually, out of the side note, because we were disputing our talking points, there was an article today or yesterday that they might close down Marcus.
Yeah, I read about that.
Yeah,
Really?
yeah.
That's the news.
They put millions and millions into it to promote Marcus. It's not because it's not making money.
Yeah.
Goldman's doesn't do anything that doesn't make them money.
Okay.
Okay, and in a cold-hearted capitalist way, that's how you
But everyone and his cousin was talking about Marcus as the
because they put
example of a fintech
they
produced
put
by a bank.
80 million into marketing.
So I was a fan of Marcus, but I was a fan because it had good rates. Like, if we're thinking, it's only a fintech in that they moved quickly. They went outside their traditional business and did it with speed and efficiency. But it was a boss Goldman move because they didn't faff with pretty design. The thing didn't even have an app. Remember, it was on the website. They had good rates. But I think with the interest rate landscape changing, cash platforms changing, when Chase UK started their savings products, they created a lot of pressure for other high street banks to create better savings products. So there's more competition in the space, and I like that about Goldman. They're like, okay, it was working. If it's not, but what I find interesting about, in my head, I read it as Xepelin. So, what is interesting is that distribution of those loans is always a challenge, right? And we've seen it time and again that you start with the best intentions and it's absolutely the right thing to do. But for me, when I looked at it, it's like fintech is coming of age because a credit facility is extremely well regulated. It's not free money. it's not here's a VC pot and I take all the risk, right? And I find, to your point, Goldman knows what they're doing, but also this is a grown-up engagement, because it would have been equally easy for Goldman to be like, tell you what, here it is on your balance sheet, and I'll write it off as an investment, and if we win, we win. If we don't, we don't. And okay, I'm oversimplifying the mechanics a little bit, but the option was there to create liquidity for them in a investment vehicle. This is the fintech being treated like an adult entity and going, here's a credit facility. These are the charges for the credit facility. These are the implications and a looming bankruptcy if you use the credit facility and you don't sort of return your money in a timely manner. So I actually think that is a very grown-up thing. Whether it creates pressure for the Xepelin guys or not, it's a coming-of-age moment.
I mean, but it's interesting about Goldman's about, like a year or so ago, they moved into the transaction banking space. If you look at the big transaction banks that are here at Sibos, the JP Morgans and Bank of Americas, they interestingly, at Money 2020 earlier this year, to name another well-known event, that's who they displayed, Goldman's, the transaction bank. And I think they're here as well. I don't know where they're located, but yeah, so they're trying to open up little avenues and move into areas to see that they haven't been before in a quick and agile way.
Ladies, I think it's time to wrap up. We have a Sibos to run now, by the way. We have a Sibos to run. So thank you very much for being with us. This will be remembered as one of the loveliest show, more informal, amongst friends. So thank you very much, ladies.
Thank you for having us.
And it's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.